play ICA motto.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैत 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 एतद्वैत.
Thank you. CA Kashyap bhai Vedya, the faculty of the session. CA Ketan bhai Saiya, treasurer of WSF ICI. CA Viraj, the coordinator of the session. And dear participants, good evening and good afternoon, everyone. Third day of the session, and I'm thankful to each one of you for being actively involved from the day one of this series. And the most credible thing for all of you is that this particular series does not qualify for CPE. So every participant who come here, they are really eager about learning internal audit. But this is a non-CPE program. But another very, very important thing which we have done, which try to do, is that we have done online, virtual. Because for earlier years, it was always physical. And it's difficult for the different locations across region to come and physically be part of the symposium. So this time, virtual we have done with the objective that every member, irrespective of the location, region, should have the equal opportunity to get the knowledge of the best of best faculty. I request the treasurer of WSFICI, Ketan Bhai Saiya, to share his speech and provide his valuable feedback.
Thank you. बंद कैसे हो गया यार?
Ketan bhai, we can listen to you. Please go on.
अच्छा, okay. Sorry. मैंने लाइव के बंद हो गए थे. I'm sorry. So thank you, Chintan bhai. In absence here, Honorable Chairman of the region, Arpit Kabra, the learned faculty Kashyap bhai, the Chairman of Internal Audit Committee Chintan bhai, Viraj, and all dear friends. Good evening to one and all. I think we had all in all a wonderful program shaping up in view of internal audit. See, if we see the entire gamut of practices as of today, which is happening, when we are doing statutory audit, we have a lot of responsibility, and the responsibility from various stakeholders, and not only company, not only the shareholders, not only the government agencies, but we have external agencies watching us very closely, and we have been seeing the kind of action which NAFRA has been taking. Under these type of circumstances, now when we are thinking ahead of the future in practice, also for all the small and medium-sized practitioner, if I see that the client is little growing, they are shifting to bigger firm, or they'll go to Big Four. So we are finding that the statutory audit practice is shrinking. Also, the risk is increasing like anything. And under that circumstances, I think the best practice or best area to get involved is internal audit. And to support that, Chintan bhai has beautifully designed this entire program of internal audit, beginning with the opportunity to till report drafting, and everything has been covered in this entire series of internal audit. My compliments to the Chintan bhai, in absence here, Chairman Arpit sir, for a wonderfully designing this concept of program. Today's topic is again a very absolutely important. It is on the risk metrics as well as SOPs. So whenever we are going on internal audit of a smaller companies, see, there were days where internal audit was considered as vouching, where we go for stat audit, we used to do a taste check, maybe 3 month, 4 month, or some other way of taste check. Internal audit, we will go ahead and do the 100% vouching and 100% audit and say that internal audit is done. Gone those days. Now we see there are internal audit firm who have specialized. They have kept the various professional, including engineers, maybe somewhere civil engineer, mechanical engineer, MBAs. These type of professionals are there in the team of internal audit. The operational audits are carried out. The risk assessment is done. The SOPs are vetted, and the entire internal audit perception, which was there 20 years before, is completely changed. And today, we see the kind of report, kind of flash reports which are generated. I think it is very, very challenging, but of course, very thrilling for everybody who is doing internal audit. He is on toes. He has to work up very, very hard. There are no standard checklists that I'll complete checklists like what I'll do in stat audit. But here I'll think that if I am the owner of the company, how will I see 360-degree improvement across the areas? So with that mindset, we'll have to carry out the internal audit. And I feel that it's a great opportunity for small and medium-sized practitioners, because even companies, when it comes to statutory audit, they will think about brand, they'll go to big four or big CA firms. When it comes to internal audit, they want quality. They are ready to pay, but they want quality. And that quality we all can deliver. So we have to be conscious about the quality of the report which we are making for client. And every time we should try and bring new flavor, try and change areas, try and look at the methodologies which we are employing, the kind of tools which we are employing in internal audit. I think if we try and 360-degree keep improving our process reporting, the area is lovely and we have huge opportunities. So wishing all the members who are attending a great opportunity in the area of internal audit, and thanking to Chintan Bhai for this opportunity for giving me to address all of you. Thank you so much, and over to you, Chintan Bhai, again.
Kitanbi, you rightly pointed out about the upcoming scope, and always there is a need to have a risk control matrix be designed. There are a lot of companies which has a starter exercise or they have left like in between. But yes, there is a need because the most important challenge is to update. Sometimes what happens the first time they are able to have process risk control matrix, but after 2, 3 years, 4 years, what happens that they are unable to update it. So this is an ongoing process and a lot of opportunity may happen and may arise here provided we are professional enough to handle these opportunities. So not taking much for time further, but one very very important announcement which I would like to make to everyone who are here, that tomorrow the session will start at 3:30 p.m. not at 4:30. Every day session start at 4:30 p.m. Tomorrow the faculty need to reschedule because of the certain exceptional meeting which arises. So that's why the tomorrow session will start at 3:30. 3:30 to 5 p.m. is a session, and then 5 to 6 is a panel discussion. So we also try to send you one email on that aspect. Yesterday I also mentioned, today also I'm sharing all of you. Please ensure tomorrow we all join at 3:30, not at 4:30. So with this, I now request the coordinator of the session, CA Viraj, to introduce the faculty.
Thank you, sir. And good evening, everyone. I am CA Viraj. Welcome to our virtual program where we will have opportunity to learn from our experienced and qualified faculty. Let me introduce you to our faculty.
Viraj is having some connection
I
issues, I
think
think.
he has rejoined. Let us wait for a few
Am I
seconds more.
audible now?
Viraj, please
Sir?
go on. You can introduce faculty.
Viraj, you can switch off your
Huh.
video, so that will give you better connectivity.
Okay, sir. Kashyap Vaidya sir is a chartered accountant and CIA with more than 35 years of professional experience. He is a senior partner at TR Chadda and Company LLP for more than 20 years. He is specialized in governance, risk, and control area. He has successfully handled various GRC assignments across India, and he is continuously working towards adding value by delivering to the expectation of audit committee. He is also a board of governance member of the Institute of Internal.
Yeah, I think there is some country issue, but Kashyap bhai, I think you have been working on for so many years. I have personally discussed interact with you, and he is a senior partner having experience of more than 35 years in this area. So we are so much fortunate enough to have Kashyap bhai with us. Thank you so much, Kashyap bhai, for coming here. And request you to please start your session. Kashyap bhai, unmute करू પડશે.
Yeah, am I audible now?
Yes, now audible.
I'm audible. Okay. So thank you, Viraj and Chintan, for introduction, which was very lavish. I don't know whether I can stand up to that or not. But yes, thank you for your kind words. Thank you for giving opportunity for speaking on a subject which is very close to my heart. And rightly mentioned by Ketan, by that unless you add value, internal audit has no place for anyone. So what I would try today is to introduce you to the topic of SOP and RCM. Chintan, what is the time available with us?
Yes, you can take up to 2 hours. I think it's on YouTube, but it's 2 hours, 4 to 6:30.
Okay, fine. So let's start without going much into other nitty-gritties. I'll just put off my video as well because this will allow me to more clear on my topic. So what are we going to do today? I think let's see. So this is the agenda for the day. I will be introducing concept of risk and control, risk control metrics and SOP. What is the relationship between RCM and SOP? And how does the testing of RCM happens and how it is being carried out? Any question and answer? Since I'm been told that there is an audience which is much more. So interactive session, I always would like to have. Please raise your hand if you have any question, or you can reserve your questions for at the end of the session as well. And then I will try to answer whatever best we can do. So let's start with the concept of risk. What is control? What is RMCA, RACM, and SOP? So if you see, the risk is everywhere. Whether my session will be helpful to you or not, the 2 hours what you spend would be actually beneficial, or you should have done some other activity which is more beneficial to you. There is a risk. Whether you will reach in time for appointment fix, whether your friend will like your gift or not. These are all the risks we face in day-to-day of life. But here we are not discussing that. What we are discussing here are business risks. So basically, internal audit is around compliances. It's around looking at strategic risk, around reputation risk, operational risk, human risk, security risk, financial risk, competition risk, and technology risk. Now, these are the few which are very common and which are faced by any organization on the day-to-day operations. You can jot down n number of risks which are there, because if you look at looking at the risk register, there will be a laundry list of risk register which is identified by an organization while they are doing risk assessment. But as rightly said by Mr. Chintan, this required a continuous upgrading and updating. So over a period of time, some risks which are identified earlier get mitigated, some new risks may get emerged. So it's a continuous exercise to look at the business risk, and the only way to do it is to do a risk assessment. And what is risk and control? Basically, the risk is an effect of uncertainty on an objective. Ultimately, every business is trying to attain and achieve the objective for which that organization is set up, be it for profit kind of organization. There should be a mission, vision, and objective for operations. So there are certain elements which creates an uncertainty whether they would be attaining that objective or not. Whether it is what is the effect, it can have a positive or negative effect. It is a risk is an event which actually puts uncertainty, and that uncertainty can be positive or negative from the what is expected and what has been planned. So if I give an example that if somebody is being at Gurgaon, and I remember when I was returning from an audit committee attending at Gurgaon, I asked a person that how fast I can reach airport. And what is told me that it will be jam plus 45 minutes. So the thing is that there is a risk which is not or unknown, uncertain. There is uncertainty. If you are in Mumbai, if you are in Bangalore, if you are in Ahmedabad, if you are in major city, and if you have to reach to a destination for a meeting, now there is a GPS which allows you to, or Google Map, which allows you to fairly estimate the time by which you could go to an event and attend in time. But uncertainty is definitely there. It depends on that particular day how the traffic is. So similarly, there is an uncertainty on achieving an objective by there is an element which actually is hampering the organization not to achieve what they are trying to do. Positive or negative, it can be both. Now, if we talk of positive impact of COVID-19, here what we are. I am delivering a lecture to around 70-80 participants and sitting at my position, which is working from home or lecturing from home, which was not actually thought of before this COVID. So basically, working from home is something which is a positive impact of COVID, and the same COVID has given a negative impact of disruption of business going down hugely, and there was no certainty at all whether it can come back or not. Thank God, it came back to normality, but it can be positive or negative. So risk, I think, is something which is uncertain, which can create a positive or negative impact. Now, how do you control that? Now, controlling that is to have a set of measures of actions. This is required to manage the risk and increasing the likelihood that the established objectives will be achieved. Right? So, every risk has a control. When we look at the risk assessment, risk appetite, and risk remedial risk or residual risk, it is always what risk can be addressed. To an extent possible, the controls are set up to ensure that the risk which is conceptualized is controlled, and somebody can go to achieve the objective what they are going to do. Going forward, let's look at risk management. So we have understood what risk is. We have understood what control is. Now see how the risk is managed, how the risk is to be managed. So organizational risk is the potential of an organization to suffer losses due to unexpected event or activity, which we have already seen in the earlier slide. Then organizations can manage this risk by developing risk management strategies such as risk assessment and mitigation, and to identify and address the potential risk. Now, what we understand is that risk management is something which risk said over it. You cannot eliminate risk. Only thing you can do is to manage the risk, reduce to a substantial level, eliminate it, or sometimes accept it and have a workaround that if it happens, then what else we can do. So risk assessment is the process of identifying, first of all, assessing and controlling the threats to an organization capital, earning, and operations. So it is a process to identify. Somebody will have to sit down and understand and think that if I have these processes, what are the possible risk or what can go wrong in that particular process is the process of identifying. Once you identify that there is a risk in certain process, one has to assess that whether it is a high, low, medium, whether it is a repetitive, the frequency is high, whether it is a once in a blue moon kind or it can recur again. And what are the controlling threats? So if I need to put a control in place, what are the threats around that controls which can put that organization to again disruptions and affect its earnings and operations? These risks stem from variety of sources. It can be financial uncertainty. It can be legal liability. It can be technology issues. It can be a strategic management errors. It can be accident, or it can be natural disasters. In recent past, we have seen that somebody published a report, and one the very big organization was put to a trouble for the report which has been published in a paper, and nobody thought of that. So it can be of a variety of resources, as I said. It can be financial uncertainties, it can be legal liabilities, it can be technology, which is very common because technology gets updated very quickly and it becomes obsolete also very quickly. Then there is strategic management errors. So sometimes you take a call, management takes a call that in a particular situation, if I operate in a particular manner, then I'll get an X kind of a result. But there is a possibility that the data on which this decision or judgments were based were either not very correct or not very effective or efficient, so that the strategic calls that were taken may lead to an error. Possible. There can be accidents, and there can be natural disasters. One cannot restrict that. So what risk framework actually it should be? So it starts with the activity of process mapping, policies and procedures support, risk management gap analysis. And what is that actually? Process maps for all key systems. What is the mapping? It is the mapping of the activity or the step to the risk which is assigned to that particular activity. Refresh up-to-date policies and procedures, which is the output. And the benefit is that the risk management gap analysis and roadmap is available to you to look at the maturity level requirement. So this is what the first step, which is process mapping, policy and procedure support, and risk management gap analysis. Next step is risk management framework and risk control matrix. We'll look into risk control matrix in detail in a later part of this today's session. But just to introduce is that it follows after the process mapping is done, the risk is identified, and then the risk and control matrix are prepared to look at the risk, the controls, and how the same can be managed. Again, the output or the benefit out of this is documented risk management strategy is available to the organization. The risk appetite is defined, whether I have to accept it, I have to have it, I have to hedge this, I have to transfer this, I have to eliminate. So appetite, once you look at the risk and the control. And risk control matrices for all key processes are actually required, not only for the two. Then next would be, once you have done the process mapping, when you have put the risk management framework in place, the next one is the role of board, which comes into where board governance and training is taken place, principal risk identified and assurance mapping is done, and of the staff created over around the control and self-control analysis also put into place. Principal risk register is prepared, as I was referring to. It is nothing but putting down the risk onto the register, which are numbered and which are reviewed over a period of time to look at whether the risk is still there, whether the risk has actually increased, decreased, eliminated, or the new risk has come into place. Assurance mapping report is prepared, and board training workshop is put in place, which helps the membership, independence, objectivity, understandings, skills required, roles and scope, communication, reporting, accounting, and environment, social and governance. Lastly, the role of chartered accountants and the auditor comes. All these three in place, what an auditor is required to do is to validate whether the control designation program or whatever risk assessment done, whatever risk control matrix is prepared, are actually working, whether there is any design gap, whether there is any control efficiency gap, or whether there is any effectivity gap. So that can happen while we look at on the transactions, maybe on a sample basis, or maybe on the population. If you are working on an analytics, you can look at the entire population of the data, which allows you to look at what are the abnormal areas which are there, and what actually are the okay. I was looking at the question. It says if faculty could do slideshow. Is that the slideshow is still there or it's not there? Can somebody tell me? Or is organizer there? Am I audible? Is the slideshow there?
Yes, sir. Audio. Okay, sir.
Video also is there. The slide is also there.
Yes, sir.
Okay, fine. Thank you for that. So, right. So I was saying, lastly, the internal auditor comes into play. It looks at the control design, does the validation, compliance report is placed, and basically this is giving a kind of a reasonable assurance to the organization that the design is effective and the controls are working as they are designed. This is a kind of a risk framework which can be explained in a very small and the most widely used framework is the one which is given by Committee of Sponsoring Organizations of Midway Commission, which is more familiarly known as COSO. So COSO model framework is thing which is used absolutely by almost all the organizations. And what it says, there are 5 principles that the risk framework is based. First is the control environment. Second is the risk assessment. Third is the activities. Fourth is the information and communications. And finally, the monitoring activities, which we discuss what is there of internal audit. We'll take this into little detail, try to understand each one of them, because this is very critical when we think of SOP. The risk is the something which is of a very prime importance. But because standard operating process is nothing but jotting down the stepwise activity with identifying the risk and putting the controls around the risk. So what is control environment? Here, the organization demonstrates a commitment to integrity and ethical values. Now, always it is said that the governance tone at the top is very critical, because there you need, let me use the word Lala kind of an organization, or if you want somewhere it is a control process driven organization. So tone at the top is very critical, where the board decides that we have to be fully, we work with the full integrity, commitment, and ethical values should be there in place in each and every steps that the organization takes. The board of directors demonstrates independence from the management and exercises oversight of the development performance of internal control. So it is always said that independence is a very critical the functions of the internal auditor. That's why I say that the CIA, the chief internal auditor, or CAE, chief audit executive, should report directly to the board and not to the CFO or CEO. Otherwise, there may be a conflict. So here, what is the control environment says that there should be always an independence from the management, and board should exercise oversight over the development of performance of internal control. The board is not responsible for creating a control or the risk assessment and risk framework and the control. Board is responsible only for oversight over the same. Board is not responsible for making it. Then management is the one which establishes with board oversight the structures, reporting lines, and appropriate authorities and responsibilities in the pursuit of the activities. We all know that there are 3 levels of defense in any organization. First level of defense is the activity, when actually the ground at which the activity is performed. Second is the supervisory authority of the same function, and third would be the internal audit or the internal control. So there are 3 lines of defense for which how it should be structured, which will depend. Again, the management has to decide based on the type of activity it has and the base of type of organization it has. The structure is defined, the reporting lines are defined, and appropriate authorities and responsibilities also defined to ensure that the objectives are achieved. The organization demonstrates a commitment to attract, develop, and retain competent individuals to alignment with the objectives. So earlier skills. So any organization, if it wants to have a commitment to work with integrity and have ethical values, it should also attract. It should be a kind of a best place to work, where it attracts and develops the competent individuals to alignment with the objectives. And lastly, the organization holds the individual accountable for their internal control responsibilities in pursuit of objectives. So unless there is a responsibility, unless there is ownership, whatever you decide and whatever you make and control over will not be of any use, slide is not visible in the proper mode. Okay. So lastly, the responsibility and accountability has to be defined. Unless you do that, there will not be any corrective action possible, because if there is no person responsible, then who would be the person who will be taking action to do the corrective action? Next one is the risk assessment. Here, the organization specifies the objectives with sufficient clarity to enable the identification and assessment of risk relating to objectives. The organization also identifies the risk to the achievement of its objective across the entity and analyzes risks as a basis for determining how the risk should be managed. So this is the phase where somebody sit down, look at the activities, look at the objective of the organizations, look at the sequential steps that are taken, activities that are performed, the processes that are managed, and look where this process is, what can go wrong, and identify and analyze the risk on the basis of determining how the risk could be managed. The organization considers the potential for fraud in assessing risks to the achievement of objectives. So it's said that it's not always possible to detect or identify a fraud, and before it is happen, nobody could come to know that there is a fraud. But in hindsight, one has to understand that wherever there is a no segregation of duty, wherever there is no control, wherever there is a potentiality of the two parties collide together, there has to be some kind of eye over it to identify the potential for fraud in assessing risk to the achievement of objective. And finally, the organization identifies and assesses the changes that could significantly the system of internal control. Control objectives. The organization selects and develops control activities that contribute to the mitigation of risk. We have looked at the risk assessment. We have identified the risks. The next step is to develop controls around the risk so that the achievement of objective is at acceptable level. If you have seen the last 7 or 8 slides, it is all revolving around achievement of objective, achievement of objective, achievement of objective. But this is the reason why the risk assessment is done and why control is put in place. Every organization, as I said, works with the objective, and every chance is there that the objective may not be achieved for reasons that there are uncertainty, and that uncertainty is to be identified and addressed so that they can achieve the objective. The organization develops control activities through policies that establishes that what is expected and procedures that put policies into section. Then what kind of controls it can be? Everybody would be knowing in this house that it can be preventive or detective. What kind of instances? In case of preventive, segregation of duties is something which you can put in place to avoid collusion. Authorization is again a preventive where nobody can authorize this or beyond a point and beyond a level. Application control, by putting your system or processes on an automated mode in an ERP, it can be SAP or anyone. You look at application controls, which can be which will allow you to ensure that no one can perform a function which is not allowed to do. While it can be preventive detective, similarly, it can be manual or automated. So if you look at segregation of duty, it is a manual control. Authorizations can be manual or automated. You can put locks and controls in your system. To give an example, that if there is no indent, you cannot raise PO. If there is a control put in a system, it becomes automated control that you will not allow to raise a PO unless there is a indent in the system. Taking in another example, if there is a credit limit assigned to a party, if that limit is exceeded or near expiry or cannot, the invoice value is much more than the credit limit, which is already exhausted, then your system will not allow you to generate the invoice. There is an automated controls. No one can do anything unless that automated controls are overridden and kind of locked is unlocked so that the invoice can be raised. Now there is a process around that also. We'll just to conclude that the automated controls can be waived or can be unlocked. Again, there should be a process around it, that a person at a higher authority should allow this. Should be a conscious call which should be documented, and also they should give a reason that why they would like to waive or unlock that contract. Detective review, internal audit again is a kind of a detective control. Review mechanism is also a detective control. Review in the sense that suppose you are having a kind of inventory which is having a very long aging, and there are items which are either slow moving or non moving. To give you an example, it's possible that the organization may have an inventory which is long dated, which is of high aging, which is non moving. There is a possibility, but what is required is that there should be a review, periodical review, which can be monthly, quarterly, as per the management call. But whether if that review is happening, and if that review is actually putting down on paper what are the actions which are going to be taken to reduce the level, and if that actions are taken in time, and if it shows the effect of it in reduction of the long aging inventory, then probably the process is in place and it's not an kind of an issue or observation. So a review mechanism in organization is most important. One has to review over a period of time what is planned is getting actually executed. Reconciliation, more in a kind of an environment where there are two systems throwing two different reports, or there are two different processes again giving two different results. There has to be a reconciliation. The most common reconciliation which we all know is a bank reconciliation, where the entries made by the bank and the entries made by the company in its book may not be the same for the reasons for the issues of check issued but not deposited, or can be anything. So that kind of reconciliation, or reconciliation of open entries in the system where there are two legs of each showing that both are open while actually there is nothing which is open at that time. So reconciliation is again manual, can be automated. And lastly, an example of detective is a physical verification. Again, we all know that stock take is taken. You go with the statement, look at the physical and see whether the same quantity is there or not. There can be excess or shortage. So these are all the controls which are put in place, either preventive or detective, to understand whether the organization is functioning the way it is planned, or if there is a deviation, there is a reason for that. The deviation is because of a conscious call, or the deviation is because of the environment which is not working properly. So this is the third stage. And the last one is the information and communication before monitoring. Here, the organization obtains or generates end user relevant quality information to support the functioning of internal control. What does it mean? That it generates end user relevant internal control. The organization internally communicates information, including objective and responsibilities of internal control. The first and the second bullet is talking about dissemination of the standard operating processes, disseminations of the RCMs, dissemination of the control mechanisms to the staff, their training, communicated properly, how the process is to be worked. And organization communicates with external parties also regarding matters affecting and functioning of internal control. So these are the four basic principles of COSO risk framework, which are very critical to be understood when we talk of RCM or when we talk of SOP. Going ahead on the controls and the control objectives, there are certain terms and certain things which one has to understand, because this will help you to understand what standard operating processes are, how they are to be prepared, and how the risk and control metrics are to be prepared. Internal controls can be divided into key and non-key controls. There can be two sets of controls. First set is the key, which is the primary procedure. which is relied upon to mitigate a risk or prevent a fraud. And another is the non-key controls. In case the first control is not for the other, there is a workaround which will be kind of a backup control, which allows you to mitigate the risk which is foreseen. So key and non-key control is very, very critical to be understood and to be known, because many a time organization would like you to go on and validate the controls which are key and do only a kind of a walkthrough around controls which are non-key, right? So that is the one. Second is detective controls, preventive, that we already discussed. There is another one which is called a corrective control. So corrective controls are designed to correct the errors. Something has happened, something has been breached, but how to do the corrective correction on that will be a kind of corrective controls that is required to be taken, so that the irregularities that has been detected are rectified. So whenever you see a kind of a very good report, kind of an internal audit report, the management many a time wants the management comment to be in three parts. Number one, what are the controls which are there in preventive, detective, and what is the corrective action by which the process will be corrected and not the transaction, right? So whenever you put up a corrective controls, you will have to ensure that the transactions are not addressed. For the reason is that if you address the transaction, if you don't address the process, the transaction may be killed, but the same transaction may recur because you have not addressed the root cause and you have not addressed the process. So detective, preventive, and corrective controls are to be understood when you are writing the SOPs or we are writing the RCMs. You need to understand what are the manual controls and what is the automated controls. Many a time, and most of the time, organization wants that the controls are automated to the extent possible, for the simple reason that to eliminate human intervention. And why you need to eliminate human intervention is that the possibility of human error, possibility of an error which can be intentional or unintentional can be avoided, because automated controls, one put in place, unless the system fails, they are going to be operative irrespective of a person who is actually implementing that controls. Control objective is an assessment object that defines the process, sub-processes, and control objective defines the COSO compliance categories that the controls are intended to be mitigated. So control objective also is a very critical part of the RCM. One should understand that. And one should write the control description in the present tense. So when you write an RCM, when you write an SOP, it's an art. It will be improved on your experience, on the time and again you are writing a process or writing an RCM. Should be always in present tense. It should be in first tense and not in a kind of a future or possible past tense. Something has happened or that would have been done. It should be always in present tense. It should be a factual statement of what is in place and not what you think it should be in place, right? If the control is not yet implemented, you should still adhere to this. An assessing is an auditing is a claim business owners and manager makes that states all information they share during the audit, and audit is accurate. That certain ecology or certain environment is in place, and you can depend on that, and based on that you can make observation. So these are some of the key factors which one should understand. After understanding what is risk assessment, what is framework of doing the risk assessment, what is control, what are the types of control, all of that, let's go to a definition of standard operating procedure. So a standard operating procedure is a set of step-by-step instructions complied by an organization to help workers to carry out routine operations. Standard operating processes aim to achieve efficiency, quality output, and uniformity of performance with reduction in miscommunication and failure to comply with industry. So let us read in two parts. So standard operating procedure let us understand the one which are marked in a different color. It's a set of step-by-step instructions. So it's something mundane and very set, uniform activity, which says that after you take the first step, what is the next step you need to take? Giving an example, if you are talking about procurement, what is the first step that you need to do? Is to look at the vendor selection, vendor onboarding, once and how to do then onboarding. You can write the process. There can be a lot of, I would say, objectives which can go into that how the vendor onboarding should take in place, vendor development, how it should be done, what are the information that you should obtain from the vendor, his past history, his capabilities, his relationship with the company, the stand in the market. After all that, the vendor onboarding is done. That is the first step. Second step is to look at the requirement, which is an intent which is coming from the user. So intent will be coming and they're coming to the supply chain or procurement team, who will convert that intent into purchase order. So next step is making a PO. What should be the terms and condition in PO? Third is placing an order, which can be on depending on the competitive quotations or tendering or reverse mechanism. Based on that, how the vendor is to be selected, giving him an order, getting the required material, looking at the quality of material which is received, whether it relates the same as per the PO, whether the price is the same as per PO, and finally the payment. So procure to payment cycle is, as I explained, is a step-by-step instruction at that what and how a product will be, or raw material will be acquired by an organization. It can be a material, it can be services, it can be anything. So that is the step-by-step instructions to carry out routine operations. So here, every time you are doing the same thing, so without reinventing the wheel, if you have a standard operating process in place, it will tell you that after taking the first, what is the next step to be taken? After taking the second step, what is the third step to be taken? So this is possible wherever there are routine operations. If there are spike, if there are change, the standard operating procedure may have to be tweaked in a way that if there is a set A, you have to work in type A, set B, type B. In that manner, a standard operating procedure may be prepared. What is the objective of the SOP, which is the second part of the definition? It tries to achieve efficiency, quality output, and uniformity in performance. Every organization wants to optimize the resources what it has. Every organization wants to focus on the quality of the output and unity of performance. You cannot have a different kind of performance for different departments, for different locations, for different units. So a SOP will achieve efficiency, quality output, and uniformity in performance. While doing this, it will reduce the miscommunication, and it will also alarm you from failure to comply with the industry regulations. So it's not only SOPs are only for operations, not only for operations, but SOP is also for compliances. Wherever there is a regulator who requires you to perform in a particular manner, the SOP should be developed around that to ensure that there is no non-compliant. None of the organization would like to be a non-compliant for any of the regulator. It can be SEBI, it can be RBI, it can be anything. The regulator or IRDA, the regulator which regulates that business, also requires that it should perform in a particular manner, and they should comply to certain, like RBI comes out with various returns that they have to file on a monthly, quarterly basis by NBFC or banks. So step by step what a person has to do so that the compliance is done. So operating and compliance both are getting addressed when you write a standard operating process. What are the 5 steps? Now this is where our skills comes into play. First of all, we need to discuss with the organization what are the areas of their operations, what are the processes and sub-processes what they have while they manage their business. So one has to jot down the list of processes that are there in the system. It can be procurement, it can be cash, sales, it can be treasury, it can be anything. HR, it can be IT, it can be finance and accounts. So create a list of processes that you want to prepare. Identify the audience. Here the audience means who is the functional head for that particular activity and who are the users who are going to use the standard operating process. What is the objective? What is the objective to write the process? One has to look into the objective because every process, until you have an objective, cannot deliver. Like to continue with the process is to procure the right material at right time for at right price from the right vendor. So this is what the objective of the procurement process is, so that you get maximize the benefit, you can maximize the savings, and at the minimum cost you get the best of the quality. So that is the objective of procurement process. Similarly, there can be an objective of HR processes where you want to onboard the right person for the right job at the right price and at the right location. So that can be objective of HR. Similarly, the objective of regulatory compliances will be nothing but to comply with all the requirements. Creating a list of process, identifying the users, and then define the objective of that process will help you to write the SOP. Now, when you write the SOP, you also will have to choose a format. Format can be in form of a narrative or it can be in form of a flow chart. So what is the requirement of that particular process will tell you whether you want to use either narrative format or the flowchart format or combination of both. So these are the 5 critical steps to write an SOP. It can be just for the sake of repetition, processes to be listed down, what is to be required, identify the users, define the objective, and choose the format to write the process. Going into the detail, the scope and purpose, set the scope for the SOP. And the list the key requirement, the purposes, which is I told you earlier, which should be what is the objective of that process. Audience is the audience and author. Pinpoint the audience who is going to use that. Engage the end user with the right language skills and the existing knowledge. So unless you discuss with the process user and process owner, will not be in a position to write down a very effective standard operating process. What you think in your mind, what you think should be ideal, or what it should be, will not give you much of a benefit unless you know the ground realities, the ecology towards this function, the pain points of that functional owner, the deliverables to the management. One has to understand everything so that you can list down the activities and the step-by-step activities that is to be performed. As I said, format can be hierarchical or flow chart. Moving forward, test and adjust. Fully test the SOP guidelines. Take users review before actual launch. So once you have made the user, once you have discussed with him the flow of the activities of that department, you jot down and write down the process. And again, use your best practices where the skills of ours as an internal auditors or as the SOP writing expert will come, is to get in the best practices what they've observed at other places. Very recently, I was told that, sir, when I go to an audit anything, I'm told that we are working here for 30 years and you come here for 30 days and try to tell us that what you are doing is wrong and try to teach us. I said, what you should tell that gentleman, there is no, that it is not that 30 years, they are coming here for a limited period and test the environment. But what advantage we have that while you have the working in that organization for 30 years, we have different variety of customers in your business, maybe 5, 10, 20, 30, where the similar processes are being handled. So we have a flavor of how that particular function or processes work, having an experience of working with 30, 40 organizations. So what we bring in are the best practices and the value addition. If you understand and if you expand that, there'll be more receptivity. So the next step is to bring in the best practices, what you have learned over a period of time. This will not be complete unless there is a training. This is to be distributed and the user is to be trained. Unless the training is done, there will not be any effective use of the SOP. Last but not the least, every SOP is a life. As I said earlier, the standard operating processes needs to be a control document where the validity also is mentioned. Typically, the validity is around 2 to 3 years, because within a 2 to 3 years, so many changes happen, which can be, as I said, which can be in the system, that is an automated system, which can be in the business model, which can be in the regulatory requirements. So all that requires now to be put down or detailed in the process, which is written 2 years, 3 years back. So ideally, every process should come with a expiry date, and on that date, a revaluation or revalidation should happen. Give me a moment. Going forward, why we need SOP? This is required to keep consistency. So if there is no standard operating process, every person who is working in an organization will work on his own, the way he would like to work. There will be non-uniform steps. There will be steps which he thinks are the good to be taken. So there is no consistency. And wherever there is no consistency, there is a possibility that the risk which were identified will come into play and may harm your organization. It allows you to provide training aid. That SOP are a kind of a tool which tells you that what exactly is required to be done, how it is to be done. So whenever a training is to be imparted to the executives, these SOPs can be a very good tool for giving them the training. Reconstruction and repeatability is allowable, because this will give in real-time examples and experiences which are brought into the SOPs. So reconstruction of that is possible. Guidance for standardized working procedures, written document of proper procedures. Many times you will listen a line that we have the processes, but that are not documented. So actually, there are practices. There are practices which are not documented. And if you document that practices, it becomes a proper procedural document of standard operating process. Again, if it is not documented, it leaves a kind of an element of uncertainty, in the sense that if it is not documented, the same step may not be followed. Somebody may follow a different step than what is been defined. It is a toolbox for staff. It is providing an audit tool. Whenever an internal audit is happening, if you do an audit without looking at the standard operating processes, many a time you will arrive at observations or audit findings which may be an exception, but which may not be an observation. I always believe that all exceptions may not be observation, because there may be a reason for that. There may be a design made to happen in that way only. And then if you don't use that SOP, your audit observations may not be on the mark. So it can be a good auditing tool. You can depend on the SOPs to map the transactions with the process and come out with the exceptions which are not in line with the SOPs. Training we already defined. Describe how to perform written activities. It gives us a step-by-step guidance. It is a kind of a user manual. Ensures quality and integrity of data generated and information captured. So this is why we need SOPs. This is why the standard operating processes are required for an organization to have a kind of a planned growth without any surprises to the management. What are the key elements of a good process? It allows quality improvement. It gives effective team management. It gives a finding flows. It's standardizing the customer services. It reduces the risk of accidents. And lastly, but not the least, mitigating the risk. So these are the benefits of SOP. It will allow you to have a quality improvement, because if you follow a certain process, it is definitely give you a desired result. So if it is around a quality in terms of performance, quality in terms of deliverables, if there is a roadmap to that, and if you chart out that roadmap, define the sequential steps that how to walk through that road so that I can achieve the desired result, your quality not only will be maintained but will be improved. It can be allowing you to do an effective team management. This process, if we've written down, and as I said, it's the step-by-step form activities. It will tell you exactly, depending on the quantum, how many team members would be required to perform that activity. It will tell you that what is the my budget for manpower for doing a particular activity, and it give you a kind of a guidance that whom to appoint and how many to appoint. Finding flows, yes, it will tell you that I was to do 10 standard activities, but I could not do 8 or I could do 9. The 11 activities were done, but the last 3 were not done in the manner it is defined. So when you map the actual as is with the SOP, it will tell you the deviations, it will give you the guidance that where are the flows. So it is a tool to identify the flows. It can standardize the customer services. So if you customer care centers are always defined and always tells that what exactly you need to do, because again these SOPs or these IVRs are prepared based on the experience, based on the past records, based on the standard operating processes to serve the customers. So that can be a good tool for your standardizing the services. It's reducing, I think this is the single and the most important benefit, reducing the risk of accidents and finally mitigating the risk. So these are the benefits of SOP, and that is the reason that every organization would like to be a process driven, and for that will require a standard operating process. What are the risks? What are the risks that you may not develop a right kind of SOP? Number one and the foremost is not properly defining your company rules and procedures. So once you are not clear that what is the tone at the top, what is the integrity, what is the ethical standards, what you have, and if you have not defined what can be the company rules and procedures, the end result of SOPs also would be not very firm and not very clear. Second risk is you are not illustrating the organizational workflow. You have made the discussion with the team, you have discussed with the user, you have discussed with the functional head, but you have not captured the exact flow. If you have not captured the exact flow of the activity, it will not give you a right kind of organization flow. And second can be cause, or the root cause can be it is developed by a party without discussion with the low-level employees. It's possible that you discuss the activity or the flow with the functional head, but the persons who are doing activities on the ground may have some practical difficulties or I would say occupational hazards while performing that activity. If you do not meet them, if you do not have a session to have a discussion with them, what you know, a high level kind of understanding about the activities and may result into a process which may not help the actual user of there or the first line of defense. Fourth is your client is not sharing the data at the time of developing SOP. You require an active participation or active involvement of the management while you draft the SOPs, because after all, we are doing what? We are putting down on paper something which is happening there on the ground. This is based on the input data that you have circulated to him, the data what you had to gather from the client, and in giving the data, if there is somewhere there is no validation by the management, or somewhere if the data is not aligned to the activity what is there, then there is a possibility, and mostly place when you are developing delegation of authority or schedule of authority or authority matrix, what you commonly known as. So if you don't have an average kind of a data of expenses, authorization, or capex utilization, or capex spending, or opex spending. You may arrive at a bracket which are not actually helping the management, or which are not in a line with the levels of activity of that particular organization. Lastly, not documenting your experience. Not having experience is one thing, but if you have an experience but not use that, or you don't document that, you will not come out with the effective SOPs. And creating too many versions of SOP. I think this is something where it can be easily avoided. Always give version number to the SOPs that you have created. So if it is version 1, version 2, version 3, instead of saying that it is version 1, 2, 3, say it is a final version, or also put an effective date, a start date and the end date, so that which is the relevant version that the organization needs to look upon can be easily defined. Knowing this standard operating process, that how the SOPs are prepared, what is risk, what is control, what is the definition of standard operating processes, what are the elements of controls, what are the stepwise activity that you need to perform to write down SOP. Now let's come to look at risk and control metrics, which is known as RSCM. This is a powerful tool that can help an organization to identify, rank, and implement control measures to mitigate risk. So you have done everything. You have done risk assessment. You have written your standard operating processes. You have mapped your risk with putting controls around your risk while writing the SOPs. But if you look at the SOP, risk and the controls are only the two ingredients of the standard operating processes. There may be too many other things in the SOPs while you writing down the stepwise activities. Every step and every activity which were written in the SOPs not necessarily relate to risk and controls. So risk and control matrix is the tool which carves out the risk and the control from the SOPs and put down on an Excel worksheet, put down on a matrix. Why it is a matrix? Because on one axis there are the risks which are being defined, and on the other axis there are the controls, and they related to the controls. What are other elements are there that also are defined, and that's why it is called risk and control matrix. So risk and control is nothing but carving out the risk and control from standard operating process and putting down in a systematic manner so that a matrix is prepared which gives you idea about the risk, about the control environment, about the objective of the controls, about the description of the control, what are the assertions that are used, whether it is a key or non-key control, whether it is an automated or not automated control. So all that, if you put it on a columns, it becomes a matrix where risk is mapped on one side and control environment is mapped on the other side. This is nothing but RCM. It is a repository of risks that pose a threat to an organization operations as well as the controls in place to mitigate those risks. So when we say risk register, RCM is nothing but replication of that, where the risk register only jot down the risk control matrix maps the risk with the control and give other, I would say, other items of the controls as I mentioned earlier. In simple words, it serves as a snapshot of an organization's risk profile, measuring the organization's risk against the formalized actions taken to prevent negative events from occurring. What are the steps? Identify the risk. Now, this is the step for preparing risk control matrix. Earlier, we looked into the steps for preparing the standard operating processes. Now, these are the steps which are identified to put in RSCM in place. So first thing is to identify the risk. As I said, we'll have to carve out from the standard operating process. You may arrive at situations where there are no standard operating processes, but you have to write RCM. And then RCM works as a kind of a hybrid document which tells about the SOP and which looks at the control. Very rarely, in a small organization, RCM are the only tool available to manage the risk in a very small organization. But in a medium, in a large organization, you cannot do without having a standard operating process in place if you want your organization to be a process-driven organization. So identify the risk from the SOPs, what has been defined, carve out, identifying the existing controls that are in place. Again, you can look up onto SOP to identify what are the mitigating controls that are put into the process. This can be preventive, as we mentioned, so let's not go into the detail. The control. Then assess the risk. How you will need to assess the risk, whether severe, high, moderate, low, negligible, based on the predetermined scale. There should be factor in risk probability and risk impact. So every risk and control matrix, as I said, have controls and all the risk, where the risk is identified is a high, low, medium or low, because at a time, depending on the time available, depending on the appetite of the management, they would like to go into high risk, they would not like to go into medium risk, or there can be a strategy that all high risks will be addressed or tested in every quarter. The medium risk will be tested once in 6 months, and the low risk will be tested once in a year. So identifying the risk category into high, moderate, and low would be very effective if you want to do the testing by selection and by the level of risk to the management. So that is very critical. And then there are methods of defining this. High, medium, and low, again, is defined based on the probability of occurrence and the impact of this. High probable, high impact is a high risk. High probability, low impact can be a medium. Low probability, low impact is a low, and low impact but high probability can be medium. So based on this, you need to chart out all your risks into these three categories, and then have your controls around that. Lastly, once the RCM is prepared, once the risks are defined, once the controls are put into this RCM, you need to do the testing. So that is RCM, monitor, review, and update. So ensure that someone is responsible for monitoring. Your RCM should be a living document. It should be kind of a current situation, and it should be reviewed and updated regularly to reflect changes. So again, there is a validation that happens, and continuous monitoring of the same is also required. So these are the steps of preparing an RCM and testing. What are the essential ingredients of an RCM? There should be a control number. So for cross-referencing purpose, it is always required that you give a reference number. So whenever you need to give a snapshot of the environment or the results of the testing that you have done, if you put the control reference number and give the description of the same, somebody can go back to the RCM and connect to the right kind of a risk and right control and look at what is required and what is to be done. Every process should be given a high-level process name, which should be defined in the matrix. For an example, you can have a revenue process, you can have an account payable process, you can have a fixed asset management process, you can have an OPEX process, you can have a CAPEX process. Likewise, you define the high-level process name, and within that, there should be a sub-process. If you are looking at revenue, there can be a sub-process for if you are into a business where it is kind of different lines of business. You say that revenue from sale, revenue from maintenance, revenue from warranties, revenue from AMC. So depending on the type of your business, depending on the stream of your revenue, the revenue can be subdivided into sub-process. Similarly, the account payable or any other process also can be subdivided. Then you put control objective. After you have identified the process, identified the sub-process, you put down the risk. I think risk scope should come first before the control objective. My bad, it should have been put first. So let's look at the risk. If the control fails, then the risk identifies the potential outcome. So you have to identify the risk as we have defined earlier, that how the RCM to be prepared. Based on the risk, what should be the control objective? Control objective should be directly aligned to the risk. Means to explain why the control exists, as well as the document necessary that control mechanism and why it is important. So a control objective language should be in a way that it directly reflects and directly tells how the risks are to be controlled. Control mechanism, control description, which is nothing but descriptive nature of the control which is put in place, which guides a person that how the controls puts into place. Then there are assertion, as I mentioned, frequency. Now this also again very critical. We will see it later. Then the samples need to be tested if you are following the ICAI standards, and one has to follow if you are giving a certification of assurance on the IFC or IFCR. You need to understand what is the frequency of that control. Frequency depends on the occurrence of that activity. If you are talking of a reconciliation, if it is monthly, then the frequency will be monthly. If there is a that activity which happens when there is a change in management, if there is a change in management of the affairs, then it is as and when it happens. So frequency can be daily, weekly, monthly, annually, biannually, or as and when. Depending on that, the number of samples, minimum number of samples that are to be selected. And then one is to, as I said, the responsibility is very important. Unless the responsibility account who is in charge of this process, you cannot mitigate it, because nobody would be responsible to take their steps. So these are, while working on the risk and control matrix, these are the ingredients which you need to keep in mind. If you are preparing an RCM, you should put a control number, you should give a process name, sub-process name, risk, control objective, control description, what is the kind of a risk, high, medium or low, kind of a control, key or non-key, kind of a control in terms of manual or automated, what is the frequency of operations, and what are the control owners. What are the benefits? What are the benefits of the RCM? So it gives a transparency and better understanding of risk. It clearly tells that what are the risks, what are the controls, and what is the objective, and how the risks are controlled. It gives clear understanding, responsibility, and accountability. When you put down the responsibility and accountability and owner name, it tells you that who is responsible for the action, and he then can be reached again and again on a later date to understand whether the action which are required to be taken are taken by him or not. Identifying, highlighting the gaps that poses a threat. Once you put down on a paper the risk and the control, and if you do a desktop review, will come to know that is there any design gap in designing a standard operating process. Give me a moment, please. Once the SOPs are in place, RCM is in place, it can give a kind of a confidence to the management and the board about the control environment, because it is not leaving anything to a surprise, anything to the wishes of any individual. It gives a standard process, the defined risk, the defined controls. There cannot be any surprise element into this, right? Okay, we'll take up the questions at the end of the sessions, as we mentioned earlier. Confidence on control environment and reliability of financial reporting that can be used by our statutory auditors. Effectively prioritize the risk and aid in auditing process. As I said, you can prioritize taking high risks in every assignment, or high and medium combination of two. So it gives you a kind of a flexibility and prioritizing your risks, because every resources are limited, and to get the best use of it, you can prioritize this. It gives transparency and better understanding of risk at hand. It is again very well defined. So there is a transparency. and there is no confusion or ambiguity in what kind of risk there can be. It clearly identifies that this is the risk, and that risk is to be addressed, and what is the control in hand, right? So this was the first part of the topic, first agenda of the topic, which was SOP and risk control matrix. What is the relationship between RCM and SOP? Not that great kind of a topic, I would say, about a detailed deliberation required on this, because by now you must have understood that what are the objectives of SOP, how the RCM is prepared from the SOPs. So to understand the SOP or interrelation between the two is not very difficult. Objective of SOP is to align business goals, support and robust MIS for decision making, and avoid process breakdown, system failures, and business interpretation. RCM picks up the risk and identified SOP and controls builds in to mitigate and reduce the risk defined. Right? So it is a direct relationship. SOP, a major set, RCM is subset, calls out the risk and control and put it down on a matrix, which is the relationship between SOP and RCM. And let's move to testing of RCM and SOP, how it is to be done. So this is what I have said. Frequency of control will define the sample size. This is mandated by SIA 5, and sampling is to be followed. If it is annual, if it is a normal or a significant risk, it depends on key or non-key. As I said, when you define a risk or identify a risk, it also need to be put into what the control is, whether it is a key control or non-key control. If it is a risk, is a key or non-risk, key risk. Annual, you have to take one sample. Quarterly, you have to take 1+1, which is including a period end +1. Monthly, you have to do 2 if it is normal, 3 if it is significant. Weekly, you have to take 5, and significant, you have to take 15 samples, or significant, you have to take 25. Recurring manual controls multiple times a day, you may take 25 for normal and 40 for significant. So this is the guidance given by the institute. One may increase the sample size to give a kind of a more refined assurance to the or the client. But this is the minimum that one has to do. If you don't do this, again, you would not have exercised a due care as required by ICAI. Okay, so first and foremost stage is to look at the RCMs and to do a desktop review. So whenever there is an exercise of testing the controls from the RCMs, this actually starts from getting the existing RCMs, which was tested a year before. Look at that RCMs. Look at the current processes which are in place, right? So before you go to the testing of operative effectiveness, the first stage is to evaluate the existing RCMs based on the desktop review. Desktop review is nothing but based on your experience and based on what has been written in the standard operating this RCM. You think that apparently there is something which is missing, or there was a change in the business model, change in the activity, change in the regulator, change in the ecology, but that change is not dovetailed into the system. To give you an example, if you look at if you are testing the RCMs of, say, a bank, and there was no video KYC which came into play in the last year when the RCM were tested, and the year in which you are doing a testing, if there is a video KYC, which is now very, very common for all banks and NBFCs, there is a different process. There is a digital onboarding that takes place, and there are different risks into that. So whether while drafting for the current year, have you dovetailed the changes which has happened in the business model? If not, then you have to identify that design gap at the first instant itself. So you like this, you look at the RCMs for all the functions, do a desktop review, identify the gap, put to the management, and tell them that these are the gaps that which are required to be either added, where the controls or the RCM reference numbers are to be either modified, or if it is missing, then they are to be added. And then you have to get a concurrence of the management that now, after doing that exercise of selecting or of doing the desktop review and doing a kind of analysis of gap based on the current environment, if there is anything which is missing, you have made the changes, and then management concurs that yes, this is the final one. That is the one RCM which you take for testing the effectiveness. Assessment of effectiveness of control is nothing when it is performed as designed, whether the evidence is where the evidences are available. If it is yes, if it is effective, document the conclusion, and if it is no, if it is ineffective, and evaluate the deficiencies. If you want to be a good and value-adding auditor, you should not end over here. What you should do is that after identifying the ineffectiveness and after evaluating the deficiencies, you should also give remedial measures to the management that how they can plug that gaps. Where we have given that while doing the desktop review, after testing that also, if you look at there is an operative ineffectiveness, you should try to find out the root cause of that, and based on the root cause, you should give a remedial or recommendations to them that how they can plug that. So I would like to caution you, if you are doing a RCM testing, you should not confuse this with internal audit, because while doing internal audit, what you are doing is testing the transactions and then coming out with the exceptions if there is something which is not gone according to the SOP or there is an abnormality in the transactions. But probably that is only limited to one or two or few transactions. Maybe that process is working very fine. There were some exceptions which came into play that definitely are required to be addressed, definitely required to be rectified, but not necessarily there is a process failure or effectiveness failure there. Because what you are testing in RCM is more on the process rather than on transactions. To give you an example, if you are looking at procurements, or if you are looking at, suppose now talk about sales, and if you have taken a samples, 45 samples, if it is a repetitive, because you will have a number of sales in a day, and in 45 samples, if you find that there was some deviation in 2 out of 45, and that deviation was because some maneuver which was occurring because of an individual not doing it according, or at that point of time he was having a reason that he made that mistake. So if 43 transactions are working fine, and if 2 transactions are not in line with the normal transactional, it has to happen, then not necessarily that process is failing. So while we can give and process improvement opportunity possible to the management to tell that the control is failing is, I would, in my opinion, would be little harsh. It is again a question of debate whether the failing of one control or the one sample itself will amount to process failure or not. We can definitely debate, but I'm giving my opinion, which is my personal, and nobody should be responsible for that. But you definitely discuss this with the management and try to understand whether it is a systematic error or it is a one-off error where there is a transaction has failed. So this is what I wanted to draw before we go to the next point. There is definitely a difference between internal audit and IFC or ICFR testing. Here we are testing the process. Internal audit, while definitely there is a focus on process, but transaction also are tested and the exceptions are thrown out of that. There can be 3 kinds of deficiencies. Internal control deficiencies, significant deficiencies, and material weakness. So, as I said, you have to be reasonable. If there are internal control deficiencies where there is a remote likelihood, and inconsequential misstatement. This is maybe because of the internal control deficiencies. Significant deficiencies will be more than remote and more than inconsequential. Material weakness is something which is more than remote, material as well as continuous failure. So based on these three, if you see this a figure, it is tilting more in the area of material weakness. So you have to be very clear, very effective in your writing. Wherever you find a material weakness, you support this by evidences, you support this by instances, you support this by the root cause analysis that you have done, but make it in a way that it is very firm, and what you want to convey is conveyed to the management. While you are looking at significant deficiencies also, you should to be go into detail, do a deep dive, because it is more than a report. It is a more likely that again it can recur, and the consequential misstatement possibility is more. Internal control deficiencies, where it is more remote or likelihood is remote, may not be that relevant as significant and material is. Here you need to, this is the testing format which is suggested. You can have a different formats, but while documenting a testing of SOPs that you are doing, this will definitely help you to demonstrate that testing has been done, and this can be used for peer review as well, or it can be used for re-verification if somebody wants to do in future. What it captures: the name of the client, the unit, the test worksheet, which gives the detail about the process that you have tested, sub-process you have tested. This is the control reference number. When you say risk number is nothing but the control reference number, control number. What is the frequency we decide we dealt with earlier? What is the test period? What is the period of audit that you are looking at? What is the test result? Whether it is effective, ineffective, or it is not applicable. Who is the process owner? How many samples you have selected? What is the control mechanism, and what is the test date? Define the actual control which was intended to be put in place, and that control is to be detailed in so much in detail that nobody should confuse with what control you are talking about. Define the steps that you have taken. What are the actual test steps you have taken? Whether you have looked into the documents, you have done the re-performance, whether you have done any kind of analysis, whether there was a kind of analytics used, and based on that, what are the test results which are coming in? Give your sample a test reference number, description of test evidence, effective. This is for our internal purposes. Discrepancy of deficiencies, comments received, who are the internal auditors, tested by whom, dated whom, reviewed by whom. Okay, so this is all what I had to deliberate on, and these are the three subjects what we had to discuss. So Mr. Viraj or Chintan, whomsoever are there, we can take up the questions. Hello. Is anyone from WRC there? Okay, let me take the questions. I can see from the screen. Since it is disabled, you are in presenter mode, slides are not prepared. These are all related to the risk that I faced. Is there any difference between SOP and process? Or there is no difference and both are same? Okay. So Praveen, there is definitely a difference between the SOP and the process. SOP, when we look at the process, and when we say process, generally what is meant by process, that it will only sequentially list down the steps. While we look at SOPs and what is construed in business parlance on standard operating process is, while we write down the flow, we also identify the risk at which step, what can go wrong, and what kind of risk are sitting inside that process, and define the control to mitigate it. So process is the first version of SOP, where as is activity is mapped, which is further clarified in terms of standard operating processes where at each stage, what are the policies, what are the standards which are maintained, are there or not there. Can you show some template of policies? Yes, I can definitely. Rushang also would like to some process. Let me see, I can call out of my. How to price project to bring a SSC. Okay. So how to price a project? Definitely, I think the only raw material of ours as a professional would be the time and the talent that is spent on a project. So depending on the number of processes, I would tell you how to calculate the cost. Pricing would be your own choice on the basis of the margin, ability and willingness to pay of the client, and any other factors like competition and all. I can deliberate on costing, but not on the price. So costing would be dependent on for SOP, the number of processes that you have to write. Typically, each process, may it be any process, typically takes a time of between 10 to 12 days for a senior resource, maybe a chartered accountant of the experience of 3 to 5 years, to complete the process end to end from looking at the existing process, discussing with the process owner, modifying it with the current status, including the best practices, and getting the concurrence. One process will take about 10 to 12 days. Have I answered your question? Can he unmute and say yes or no? Or otherwise, it's like I don't know whether it is there or not. Is it possible to share this presentation on email? Yes, definitely. You can write to WRC. A client is asking to do an internal audit for a process where no written SOP exists. He does not want to invest in SOP writing or have it done. Any recommendations on approach here to do a quality audit as per ICAI norms? Okay. So as I said, the standard operating process may not be there, but what would be there is that you need to discuss the practices that are not documented. So there may not be a kind of a very formal standard operating process control document in place. But what you can do is that you sit down with the process owner, sit down and discuss that what are the deliverables of that function, what are the activities that he performs, and what is the expectation of the management out of the work what is doing. As I mentioned, every process has input and the output. Every process has an objective. So if they have not written, you try to capture that. If that policy is not documented, try to document the practices which are there in place, and then write down on your own a kind of a small document which gives you RCM, risk control matrix. Don't get into the writing of SOP, but prepare an RCM and see that your team or whomever is doing the audit executes that. There are tools drawing SOP like flowcharts. Visio is the one which is more frequently used. Visio is a tool which can be used very well, and is it user friendly also. Tools like Silom please help discover process and stop faster, or INE equivalent for SME. No clue. I have never used this, so sorry, I cannot answer this question. How to motivate employees to share experiences or draft SOPs may see it as a threat. I don't think so, because see, after all, the SOPs are to help the process owners or employees, whatever you say. The experience, if I say, if you are helping them to make that process easier, to make his life simpler, they would welcome to adhere to the SOPs. Many a time I have faced a situation where we have recommended to modify the SOP rather than suggesting them to comply with the SOPs. There will be a possibility that the SOP is drawn in a particular period of time which was not validated or reviewed after so many years, and on the practical difficulties on the ground, are such that if you observe that SOPs, there may be a kind of a disadvantage rather than advantage to the organization. So it is always better not to become lakir ka fakir. If you feel that employee is facing difficulty in observing the process, give a recommendation for a modification that helps him without risking that the risk which was identified is compromised or compensated. So without compromising the risk, if you can give him a better and the simpler process, the employee or the processor would be very happy. Any ready-made editable depository or SOP for small companies or startups which can be used as a starting point for client? Nothing. I think if you search on the open web, I don't know you will get any ready-made repository of the SOPs. It's an art and it can be developed, but I don't know whether you can get something. Internal audits have specialist firms like Aneja or Big Ten. Any suggestions for CA wanting to make a specialist firm in this space, building on earlier corporate experience? My only suggestion would be that if you want to be an internal audit profession, you should have always in a mind whether I am adding any value or not. Because any report, maybe of any number of pages, will have no value to the client unless you make a value addition, either in form of suggesting some savings or revenue enhancement or process improvement or compliances. If it is not revolving around these four, I think the specialization in internal audit will not come. The name what you mentioned, maybe some other names also, they have become specialized over a period of time, practicing these only, understand the business, understand the process that you are auditing, understand the objective for which that process is calculated, never have a biased or a kind of a fixed opinion on anything. Do it with open mind. Always have a mind in your mind that you are a trusted advisor. You are not a police. You are not there to for a fault finding exercise. If you have all this in mind, I think you can become a specialist. It comes over a period of time. There is no fixed date that you become specialist on 18th of October 23. It is the auditee or some people who can tell you that now you are specialist in internal audit. So keep doing a good work around value addition and you will achieve that. Is it realistic to do a quality internal audit for startups or low turnover entities, say below 20 crore turnover, which are not able to pay more than say 20,000 per month? This, I would like to reserve this answer. SAP has GRT tools and inbuilt controls, which is not common to Tele or even Zoho. How does internal audit in such environment vary? Very good. So if you are having a GRC tool, you know how it to be used. If you are using Tele or Zoho, which GRT tools basically is what? It throws out the exceptions, whether in the nature of in segregation of duties, whether there is a conflict in kind of actions which are defined. So this GRT tools is a query written around the data which throws out the exceptions. In case of Tele or even your life becomes little difficult where you don't have the support, you'll have to own your own based on the physical testing done, based on the data analytic tools which you can use. There are good data analytical tools which are available in the market at a very reasonable cost, which can go into the data which is extracted from the dump of Tele or Zoho. Write a query. There are some fixed queries. It comes with the standard query which can be run on the dump, or you can create your own query, or if like you call out all the transactions which are done on Sunday, and it will give you a report on a click of a button. So use the data analytics. So if you don't have SAP or GRC tool, SAP that is a GRC tool and you are working in Tele or even, I would recommend to use analytical tools to support your activities. How to decide for which process SOP narrative format is good or flowchart is good? Okay. Can you share any simple? Yeah, we'll try to do the look at through it at a later stage. But how to decide at which process narrative or the flowchart is I will tell you, in most of the cases where it is technical, where it is a kind of a more of a mechanical thing, flowchart would be more convenient. But where it is not so mundane, but it can be so variant of a particular activities, the narrative would be better to demonstrate than the flowchart. Otherwise, in flowchart, you end up doing so many yes or no's. Flowchart should be used where limited number of yes or no's are possible. How to get work related to pressure SOP as a practicing chartered accountant. Okay. So the only way to is to, whenever you are doing internal auditing, look at the SOPs, whether it is there or not there. You cannot get a standalone assignment of preparing SOP unless you are an expert in it, or unless you have any earlier chance of getting into that particular organization. The best thing you can do is wherever you are doing audit or wherever you are doing any other operations, look whether they have standard operating processes or not, come out with the advantages and disadvantages of this, and then convince the lead that they require this. If an auditor identifies a risk which is not present in the RCM given by the management and management does not accept the risk, how to deal? Good question. So as an auditor, as an internal auditor, or maybe a statutory auditor, if the risk control matrix is not including the risk which in your view, it is very material, where it can occur and where there is a high probability, you should definitely point out in your report, either by way of a disclaimer, limitation, or a process improvement opportunity. But you need to definitely put down in a report, in a writing, that in our view, this is the risk. Probably there is a possibility, because many a time the management would like to assume the risk rather than mitigate. So it's the risk appetite, which in a normal parlance is known as. If it is a risk appetite of the client, let that be documented, right? Because as an internal auditor, your job is to identify the gaps. But if it is a management call that I don't want to do a I would say remediation, maybe a possibility that they don't want to do because of the cost benefit analysis or because of their view about the possibility of occurrence or the damage. They may not go into that, but idea is to document definitely for your future safety that you have identified this, and this is the management call that they would not like to work around that. Other than the fraud prevention or cost saving, any way to present the benefits of internal audit to client to justify fee increase? Fraud prevention, I don't know whether you could achieve that. If you would have done that, then fee should not have been problem at all. And in my view, fraud is an event which comes to your knowledge after it happens. So prevention, nobody can say that I have prevented, right? The reason is that it comes to know only when it happens. If it would have prevented, it would have been possible kind of a fraud which has been avoided. Any other way to increase the fees? Sorry, I think I cannot. I would suggest that focus on the value additions that you have given. Make a presentation that if you are doing an audit for last year or 2 years or 3 years, show them what benefits you have extended to them. Other than saving and prevention of fraud, also there are lot many things that you might have presented that would have made their process little better, that would have prevented them from kind of a reputation risk or any other thing. Saving and fraud are only two which goes with the cost, but there are other risks also which we looked in the or first or second or third slide, where it can be technology risk, or it can be reputation risk, or it can be competition risk. So if you can bring out in your presentation that this is what I have done in last 2 or 3 years, I think client would be more than happy to increase. How do you decide that what level of details to go into for a SOP? too high is not usable, but too detailed may not be understandable other than process owner. It's a purely individual call, and that comes out of the experience. So, and also in discussing with the management, consider listening the tone at the top, listening the deliverables and the expectation from the client. You have to make a judgment that you want to overkill it, or you would like to moderately do it. Is there any standard training material of ICAI to introduce client to working in process or SOP culture? I don't know if any, but if anybody has any idea, please share with the group so that I also take away something for the day. How far is the data analytics, data science course useful for an internal auditor? I would say it would be very useful because see, whenever you do a sample testing, or sample, or many times we feel that it is a representative of a population, then there are ways and methods of doing the sample selections. But in any case, however, finally, a sample is a sample. But data analytics will allow you to go into the population, and data science will go into the data population and query so many things which are exceptions. As I said earlier, all exceptions may not be observations, but you can work on these exceptions and come very near to the observations, other than only otherwise than looking only in samples. So there are more possibilities of finding exceptions in data analytics, particularly if you are looking in a data which runs into lakhs of line items, of humongous of data. If it is very limited, your VLOOKUP can also help you. But if it is a humongous data, then data analytics is only way to be very useful for editor. Yeah. Yeah, Ketan bhai, I have done. If any questions, I can take that.
Yes, sir. I think very well covered all the questions. And there was one question which you said that you will not comment, that 20 crore and fees 20,000. I think, we irrespective of this turnover, we keep facing, such problem of how to convince the client about the fees increase. But, best way is to see their, kind of other expenditure, increase in salary. There are so many ways to inform the client that, look, our costs are also increasing, and we are also in the same city where you people are.
Yeah, I think that's the only way one can do that.
So we need to impress upon them that the cost which we are incurring is also one of the important factor. And I think, for a company which is having turnover of 20 crore, to personally, if you ask me, even 20,000 is a very, very low fee. Of course, each firm will, have its own working of cost of man hours, and based on cost of whatever cost we work out, and the fees are naturally dependent on our cost. And the larger firm will have the high cost because of their infrastructure, and the smaller firm may have little lesser cost based on their infrastructure and the place or the city where we are. But in general, I think 20,000 or 2,40,000 per annum is naturally very lesser fees if you are working on a monthly assignment. If a company having 1.5 to 2 crore turnover on a monthly basis, and you are giving monthly report, then fees are very, very low, and that will not suffice the basic cost also, which we need to impress upon the client. Obviously, these are all challenges. It's not so easy way I am saying, but we all are facing such challenges, but we'll have to tackle them in a different way depending upon the client and depending upon the type of business in which the client is. Nonetheless, I think very well deliberated by Kashyap bhai on the SOP as well as the risk metrics part and the interplay between both. Uh, uh, Let me place on record the sincere thanks for Kashyap bhai for sparing his valuable time, guiding through us in last 2 hours and taking up all the questions very aptly. Kashyap bhai, we at WRC and on behalf of all the participants present here, I propose a very well hearty vote of thanks to you. And I request that same such support will always continue in future to the Western India Regional Council. Thank you so much, sir.
Thank you so much. Thank you for giving opportunity. For just a minute, I'll just put on the board sample process. Just a minute. Is it there on the board?
It has started. Yeah, now it has come.
Yeah, it is for the benefit of those where the question where we can have a. So ideally, don't go by the content. What it should be, it should have a policy number, name of the policy, give a reference of the page. Always they should start with the preamble that what all you are going to do it, what are the documents which are referred, give the definitions of whatever has been discussed on that. After definitions, go to the, this is the most important, that what is this document, what is the policy, what is the policy number, what is the version of this, what is the validity date, and when it is going to be renewed, and then start with the process. So this is what the format generally is to be used. The objective, real, and the version. So this is what it is. Thank you. Thank you, Ketan bhai, for nice words.
By
And
taking a clue from this, if time permitting, we'll talk offline. But if not, the SOPs are not there in the standard way, the way some participant asked us. Can we say and prepare some maybe 1-pager, 2-pager document which will have the content of SOP? May not be the actual SOP, but we can say that the SOP content is this. And then some small soft publication. We can put it on WRC site if you support us on that.
No, definitely we can do that. But Ketan bhai, the point is that the SOP are akin to an organization. So one SOP which is
I agree.
may not be good for
I agree.
But
That's why I'm not saying
try.
actual SOP.
We can
I'm not saying actual SOP. Yeah,
I
actual
say
SOP, I also agree.
What should be the content?
I
basically?
agree. Content. And we can, divide it into 2-3, maybe, one, the content of SOP for manufacturing company, for service company, for trading company, some 2-3 pager document, these type of, if we find, I'll also try for some more volunteer. Maybe we can create a team of 5-7 people as a volunteer, and then try and just a thought came to my mind because somebody asked this question.
Good idea, Ketan bhai. We can explore that. And I am with you anytime. Yeah.
Yes, sir. Yes, sir. Thank you. Thank you so much.
Thank you so much.
And really appreciate your valuable support.
Thank you so much.